Dzień dobry Państwu. Miło nam
Ladies and gentlemen, good afternoon. Welcome to the press conference after the meeting of the Monetary Policy Council. Today we have with us Professor Adam Glapiński, Governor of the NBP and the President of the MPC, and members of the MPC, Professor Eric Won and Dr. Kamil Zubelewicz. Professor, please. Information from the meeting of the Monetary Policy Council held on the 4th and 5th of February 2020. The Council decided to keep the NBP interest rates unchanged. Reference rate at 1.5, lombard rate at 2.5, deposit rate at 0.5, rediscount rate at 1.75. Incoming data from the global economy indicate a stabilization of economic growth at a relatively low level. At the same time, uncertainty about the global outlook in the coming quarters persists, despite some indicators suggesting some improvement in sentiment. In the euro area, economic growth declined in 2019 Q4. Amidst the ongoing downturn in industry. In the United States, economic conditions continue to be relatively strong, although the weaker activity in industry had a curbing effect on economic growth in Q4 2019. In China, GDP growth stabilized in Q4 at a lower level than in previous years. In the recent period, global oil prices have fallen following their previous substantial rise. At the same time, the prices of many food commodities have increased in recent months. As a result, inflation in the external environment of the Polish economy has risen somewhat. The European Central Bank is keeping the deposit rate below zero while conducting asset purchases and signaling the maintenance of a loose monetary policy in the coming quarters. After the 2019 interest rate cuts, the Federal Reserve is keeping the rates unchanged. In Poland, economic conditions remain good, despite a slowdown in economic growth. Based on the Statistics Poland GDP flash estimate in 2019, it could be estimated that GDP growth in Q4 2019 decreased. GDP growth is supported by the steady consumption growth, albeit slightly slower than before, fueled by favorable labor market conditions, strong consumer confidence, and social benefit payments. At the same time, incoming data indicate further growth in investment and exports. CPI inflation stood at 3.4 year-on-year in December 2019. Inflation in December was driven up by rising food and fuel prices. At the same time, accelerated service price growth boosted core inflation, which nevertheless remained moderate. In the Council's assessment, the outlook for economic conditions in Poland remains favorable, yet GDP growth will probably be weaker than in the previous years. There remains uncertainty about the scale and persistence of the slowdown abroad and its impact on domestic economic activity. Current forecasts show that inflation may exceed the upper limit of band for deviations from the target in the coming months. The temporary rise in price growth will be driven by supply-side and regulatory factors, ones remaining beyond the direct impact of domestic monetary policy. As the impact of these factors fades and GDP growth weakens, inflation will gradually decrease. In the monetary policy transmission horizon, inflation will be close to the target. The Council judges that the current level of interest rates is conducive to keeping the Polish economy on a sustainable growth path and maintaining macroeconomic stability, while at the same time enabling to meet the inflation target in the midterm. Thank you. Thank you. Ladies and gentlemen, questions? Renata Oliasz. I would like to ask about the recent data from the Polish Statistical Office that talked about 4% GDP growth year-on-year. Does the Council believe that there would be no need to change interest rates till the end of the year? Or maybe, PMI is at a very low level, so maybe the inflation path could also change. Well, the projection, we will see the new projection next month. We don't know much about it, so let's not discuss it. It's not yet clear. When it comes to those statistical forecasts and the statistical results about our GDP last year, we know the data, and whether there would be hikes or not, we cannot foresee that now. It all depends on how the situation evolves. It all depends on what's going to happen and what we're going to forecast for the coming quarters. We're always looking at things ahead. So in our policy, we're always referring to what could happen within quarters to come. I personally confirm what you're always interested in, that till the end of my term, I believe that the rates will remain unchanged. But generally speaking, the probability of their decrease is going to be higher than the probability of them being increased.
Dorota Bloomberg News. You said, Governor, that the probability of interest rate cuts is higher than that of a hike. That means that you believe that the GDP growth will be weaker and weaker. I expect it will be weak, just as it is globally. In Poland, the foundations of growth are sound. There are no internal reasons for us to grow slower than before. Like, for instance, it was 5%, now we're moving towards 3, now we have 4, and abroad the economic conditions have fallen down, although there have been efforts from the government to maintain or accelerate that growth. They are rather limited, especially in Germany. Our main business partner is Germany. They have been able to somehow stop the decrease of the economy. It is above the watermark. 0.6%. The Deutsche Bank's governor wants to be optimistic. He's stating that. Likewise, the ECB governor says that there will be an increase from the stagnation, but there are many question marks. If the situation stays as it is, the economic growth will be lower, and hence the probability of interest rate cuts is higher than that of a hike. I understand that you expect, because you're talking a lot about growth in the West or generally, you seem to avoid the question about GDP growth in Poland. Meanwhile, GDP for last year, as per whatever can be said about Q4, indicates that the factors that have been the driving engine of the economy in Poland were not as strong as expected by the analysts. I'd like to ask whether, in your view, the economy in Poland will be in such a condition that it will require that the interest rates be cut. In Poland, as in Europe, as Europe-wide, actually in the whole Western world, over the last decade, GDP growth has been driven by consumption and the growing disposable income. There are no factors to slow down our economy. There are no major problems expected by observers. Like, for instance, difficulties in the labor market did not occur. The employment grew, some reserves appeared. The income would keep growing. The salaries would grow there, so there were no objective reasons. However, there have been difficulties on the supply side connected with the increase in prices abroad, and owing to ASF in China and in Europe, partially. Pork prices grew substantially, as well as the whole of food commodities and beverages, non-alcoholic beverages grew. Energy prices have occurred owing to the energy policy of the European Union, and and their obsession connected to a clean atmosphere. It's an administrative element that we have no control over, and also the geopolitical situation has been complicated in the Middle East. The U.S.-Israeli Iranian conflict situation has aggravated, and hence the oil prices grew, but it's not much better now, and they have fallen again. So, however, these factors do affect us. There are also such effects as the weather. If the weather conditions were maintained like this, then we would be having problems with drought. But everything is still ahead. It's snowing in the south. Like I said, there are no internal reasons. The foundations are very good, but owing to the hampering or slowdown of the growth rate in Western Europe, especially in Germany, then the GDP growth rate has also decreased with some delay from 5 to the vicinity of perhaps 3, 3.5, 3.6. We'll wait and see. 3.5. I'm talking about the whole year, this year. I'd like to ask you whether coronavirus has been discussed by the MPC. Yes, a lot, as a possible effect. Could you share it with us? And maybe Mr. Zabalevich, if we could just ask you. I think so. We have one hawk today and one dove. So that's what you craved. And in the middle, there is this moderate man in between. Coronavirus. We're not interested in it in medical terms, but as a phenomenon affecting the economy, very much so. And some analyses and reflections were presented on how it would further work as compared to the previous epidemics that we've had, like SARS, for instance. In China, you can already observe some results. This is mostly affecting the transport industry and so on. But if it persists, it will also have an impact on the economic conditions. I hope it won't. As an optimist, I believe it will soon be controlled. I believe in medicine. However, today the impact is negative, especially on the Chinese economy, and the Chinese economy largely affects the global economy. It is still facing problems owing to the trade wars with the U.S., and now coronavirus has been added to this. Dr. Zabalevich, which question on coronavirus? I won't tell you more about it. We've discussed it a lot today. You can see that Southeastern Asian countries respond to the economic slowdown also by their economic policy tools, but luckily this will hopefully not be our case. We realize the potential threat. Everybody can see how China's position has strengthened as compared to the previous medical crisis of that sort. However, as of today, it should not affect us. Let me also only ask you this additionally, because I'd like to ask you whether you share this perspective that the next move will be an interest rate cut. And are you also convinced that only conditions which are out of the MPC's control impact the relatively high inflation? Whereas in 2016 we had deflation, and then inflation systematically appeared. It would grow, and it will be growing. I presume that the factor is internal. And ever since the beginning of my term on the MPC, I've observed that the interest rate level is too low, and I agree with the governor who said who would vote against the moves. I agree it should be 2 to 1.5 as far as the base rate is concerned. because it would let us avoid price volatility, and today we would not be risking the surpassing of the high end of the band. Unfortunately, my modest application submitted in November, almost 1.5 years ago, it was not supported by the MPC, even though that was the second consecutive projection showing that we would have an inflation above the midpoint of the band, of the target band. Why do we need to increase? Why do we need to high? Because there might be some unexpected phenomenon that would put it up high. Such phenomena can be of different natures, like a problem connected with a virus epidemic or some diseases contracted from animals or from swine, for instance. However, these are things that can hardly be expected because countries increase the prices of services and taxes, trying to keep up with the price increases, and they cannot make sure that prices should be lower. If prices go up, you will see adjustment measures from the government. This year we've had this infelicitous coincidence, as luck would have it, because on the one hand we have noticeable inflation. On the other hand, there is a wider and wider scope of employee capital programs. Whether we like it or not, they increase the cost of labor. Someone might say that the increase in labor cost means that people will receive their increases later, that entrepreneurs will not be as prone to increase their salaries because they have to be involved in PK. But from the employees' point of view, that means that real salaries will stay at the same level because there will be no increases and there will be a tax, or they might even drop if someone is not capable of negotiating a pay increase. On the one hand, we have the inflation pressure. On the other hand, we have the negative impact of PPK on labor supply. On the third hand, there are also some negative phenomena from the economic conditions, and this situation should not make us prone to cutting interest rates, because as of today, the documents that we have state nothing about any expected abrupt decrease of the economic conditions, but we're waiting for the conditions. If that is the case, let's return to 2016, when the economic growth was not impressive, but we had inflation, and notwithstanding, no one would cut down the interest rates, and hopefully no one will also be contemplating such a move in the next months, that this can be avoided. Whether we need a hike, generally, as you will know, I believe that the inflation path is too high, so I am in favor of hiking. However, if I were to take the position of the whole MPC as a reference point, we would need to wait for the next projections. Notwithstanding, unfortunately, my forecasts have proven to be true. In the electoral year, Poland is confronted with too high a price increase that people observe.
If I may, indeed, ladies and gentlemen, I am seen as a dove, but I'm more of an eagle. Namely, I believe that we need to strive for monetary sovereignty, but I'm an eagle with a dove's heart. So I am certainly looking at inflation. I'm certainly following inflation rate. This is what we have to do in the central bank, but I also very much care about our growth, about jobs in this country. So that's my mission. And I would like to say that the fact that we have a low interest environment and that we've managed to maintain this low interest environment, and we've been managed to do so for nearly 4 years, for years. It's been the fourth year. So I believe that this low level of interest rates allowed us, it was one of the factors that enabled high pace of economic growth, that we are catching up with Western Europe more quickly, and we should maintain this good growth rate. So I have a different opinion than my colleague, Dr. Zubelewicz. I believe that it makes sense to keep low interest rates, to stimulate the economy, and to try to control inflation. And I think this is what's happening, actually. And I think that we're managing to do our job in a positive way. Also, I would like to say that I share the opinion of Governor Glapiński that the fact that our economy is slowing down a little bit is due to external factors, namely most of our trade partners are dealing with a bit of a slowdown, like Germany and other Western European countries. But what we're managing to do, despite all that, we're managing to have quite a high growth rate, 3-4 times higher than in those countries. Also, I'd say that the inflation target of 2.5% plus minus 1 percentage point, I'd say it's a very flexible approach, and this very flexibility of our monetary policy is one of our strengths. So I think it's something to be proud of, that we have our own central bank, our own monetary policy, our own currency. And we do have different opinions, like myself and Dr. Zubelewicz. But still, we here domestically have a say in how our monetary policy is run. We recently had this conference in Warsaw where we met colleagues from Slovakia or Czech, and they were envious of the fact that we could steer our monetary policy, because they have already given up their monetary policy to, let's say, supranational structures. But of course, we will have different opinions, and it's natural that we do have conflicting opinions that we discuss. There was a bit of a slowdown in our economy due to some external factors, as I've mentioned, but we need to also point out to PMI. I'm saying this in my interviews. I'm a little bit alarmed that it's been a year since PMI has remained below 50 points. So it's a certain psychological, let's say, threshold, and it's below it. But there is a way to maybe ease our monetary policy in order to maintain a fast pace of economic growth and to counteract unemployment. And other central banks from CE, like Hungary, for example, they do have a higher inflation than we do, and even lower interest rates. They're not thinking of hikes. They are easing their monetary policy. Most central banks in emerging markets, you can see that now, you could see that last year, they are cutting interest rates because they're afraid of a slowdown, and they want to support and maintain economic growth, of course, having inflation under control. So I believe that we are doing our job well, and the Polish economy is on the right track. Generally, I'd say the Monetary Policy Council as a whole believes that stabilization of interest rates has been conducive to the Polish economy, and it will continue to be conducive and to support the Polish economy. Our economic situation is good, even though our pace of growth is a little bit lower and inflation a little bit higher, but I think it's transient. Ladies and gentlemen, we do have time restrictions today, so 2 short questions are still allowed, but no more. Rafał Tuszyński, the Polish press agency, the economic desk. I would like to ask about something from your statement. How fast you think inflation will be approximating the target? Will it be close to the target towards the end of this year or maybe in 2021? Well, the perspective that we're looking at, we're always looking at 2 years, like 2 years out. We will see when we see the March projection. But now we're thinking in the first 2 quarters of this year that inflation will grow. It's hard to tell up to which level, but it could be below the higher band of our target, and then in the second half of the year we're expecting a decrease. So somewhere mid 2021, what kind of inflation are you thinking about? Well, in March, when we already have the March projection, we will know more, and we will know more about the risks around the projection itself. At one point in your statement, it's been added that the current interest rate level allows for the for the achievement of the inflation target in the midterm. So do you all agree that in the medium term the inflation target might be met? Well, I remember that at one point we had a debate over this announcement, but we thought that over this statement, but we thought that probably come the March projection we will know more, and our discussion would be more rational. Last question.
The last question to Dr. Zubilewicz. Recently, there was information that you voted against the assumption of the financial plan for the next year. What are the reasons for this? Well, traditionally, it was about the increase in remunerations. I believe that you could be involved in a more saving policy, just as in the case of monetary policy. I think that higher interest rates would be supportive of the Polish economy. Let me remind you that the MPC has also increased an increase. It's not up to us. It's not up to us. Ladies and gentlemen, thank you very much for today's meeting, and you're all invited to the next one in a month's time.